Welcome to the latest Motley Fool scoreboard. I'm on in Chalk Balloon. We've got longtime fools Jason Hall and Matt Frankel giving a 1 to 10 rating to a company that scored an 8.2 the first time we did it. It's done quite well since I was forced to buy it back in 2024. It's a stock Matt has been bullish on for a while, as you'll see. It's General Motors, GM, ticker symbol GM. We'll rate the strength of GM's business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Matt's at a 9. Jason's at a 6. This is going to be a recurring theme.
Anand, you're not going to have to worry about having to buy more shares of GM here, because this is the one stock that I think Matt and I are probably the farthest apart on. Now, if I were grading on a curve based on industry, it would be an 8+. But this is a brutally competitive industry. The margins are thin. The capital demands are extremely high. And, oh, by the way, it's also viciously cyclical. We can look at the books, the results that we just got. Revenues declining, costs of navigating the EV demand transition. They're costing GM billions of dollars already. And all of its legacy peers, along with it, are trying to predict like future demand while making money today. The decision to pull Cruise out of the robotaxi business, that I think that underlines how a leader in an area can quickly lose its place just by walking backwards. And that happens a lot in the auto industry.
So I gave it a 9, as you said. And first of all, Anand, you're welcome for making me buy shares. Jason.
Thank you. Yes.
Jason's right about the competition in the industry and the margin concerns, but GM deserves a high score anyway. It's the number 1 in total U.S. automotive sales and the clear number 2 in EV sales, and that's new. Those are growing very fast, despite a much more crowded landscape in the auto industry than just a few years ago, with all these new entries like Rivian and things like that. GM's software sales, which is things like OnStar, Super Cruise, and other subscription products, are growing really fast, with 54% growth expected this year. It's a rapidly growing stream of high margin revenue that kind of can address Jason's margin concerns over time. And I applaud the decision to get out of that robotaxi business that was costing them billions of dollars a year, while keeping Cruise's technology, which I have to say, as someone who owns a Super Cruise-enabled vehicle, is pretty excellent.
Right. For management, a 10 is Warren Buffett, a 1 is Homer Simpson, Matt's at a 9, Jason's at an 8.
Yeah, Mary Barra has done a great job at GM. She's been there a lot longer than she's been CEO, but in the roughly dozen years that she's been CEO, it's important to remember that the stock has trailed the market by a pretty wide swath. Matt's going to talk about the reality. She took over a tough situation. She had to basically turn the business around. I'm not saying any of those things to take a swipe at Barra. She's done an incredibly good job, and I want to stress how tough this industry is and give her credit where it's due. It's just been a better investment than any other legacy automaker, but that's a crazy low bar, guys.
Yeah, I think we're pretty aligned on this one. I love CEOs who start at the bottom and work their way up. And Mary Barra did. She started as an intern more than 30 years ago. She's one of my overall favorite CEOs. Jason's right about that the stock has lagged the market since she took over, but she inherited an absolute mess in the wake of the financial crisis. The automakers were a punchline at that point. It was really terrible. It took people a while to get over the bankruptcy of GM. Mm-hmm. Not only it was financially terrible, but the products were really subpar. American cars themselves used to be kind of a punchline when you were talking about reliability. And she's done a great job of building it into a leader. The market seems to be finally figuring out that GM's worth a little bit more than a mid-single digit multiple of earnings.
For financials, a 10 is a fortress, a 1 is yikes, Matt's at an 8, Jason's at a 7.
Yeah, if you just look at the balance sheet without any context of what you're looking at, you might think it's deteriorated, but it's not the case. The growth in debt is almost directly tied to its loan book growth, not more debt on the automotive business. They lend to auto buyers. It has plenty of cash, has mostly maintained a large cash balance. It has some additional credit availability, so liquidity is not an issue, but it's going to continue to face significant capital spending needs to compete in the evolving industry, auto industry. And some of that spending, as we just saw, is not necessarily going to deliver in the ways that we expect. Matt mentioned it's number 2 in EV sales in the U.S. I mean, that sounds good, but they still took a pretty massive hit on their books because of capital investments that are not going to deliver as quickly as they want. So for those reasons, the reality is that its cash flows are fine right now. Inevitably, there's going to be an economic downturn where they're going to fall more severely, and I just can't give it higher than a 7. But Matt can.
Well, I give it an 8. I can't really give it much higher than that because of the cyclical nature of the auto industry.
Yeah.
They have excellent financial flexibility. They're growing fast in the right areas. I mentioned software, generating free cash flow about $10 billion a year, 5.7% free cash flow margin. It's strong for an automaker, but software growth and EVs rapidly heading toward profitability as battery technology improves should expand this significantly over the next few years. They have over almost $22 billion in cash and securities on their balance sheet. Massive buybacks. They reduced their outstanding share count by over a third since 2022, and a growing dividend. I like this financially.
All right, Matt. Well, let's talk valuation. How well will GM stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
All right, here's the battle royale starting now. So I recently wrote an article predicting that GM would be a $200 stock within 5 years. So there's your answer. I'm predicting 15% plus returns over the next 5 years with a safety score of 7. The new buyback authorization implies an 8% reduction in shares this year alone, and that should continue as long as it stays this profitable. Margins should expand with EV profitability and software growth. Lower interest rate environment. Don't forget about President Trump's $10,000 new tax credit or tax deduction for auto loan interest. It could create an excellent growth environment for the auto industry and GM in particular. There are a few stocks that I like that I think have better risk-reward dynamics than GM in the market.
Yeah, my safety score is 7. I think that it's still reasonably relatively safe with Mary Barr running the show and the improvements they've made. But the big difference is the return profile. I'm thinking 5 to 10%. A ton of this great run that you've benefited from, Anand, was multiple expansion, not improved financial results. I agree. When this was trading for a single-digit earnings multiple, there was a lot more to like. But I think from here, these valuations, we're going to see returns that are more in line with kind of the more medium to longer term results. I'd be surprised if we get double-digit in annualized total returns. Yeah, share buybacks will help. But automakers are price takers, and all of the things that you're talking about, everybody else is doing. Cheaper batteries make cheaper cars, not necessarily better margins. I'm less convinced that profits are going to grow in the way that a lot of people seem to think.
Thanks to both Jason and to Matt. They've given GM a strong overall score of 7.6 out of 10, with Matt clearly more bullish than Jason. Jason doesn't have a top it because he believes it's a mediocre industry. Meanwhile, GM is Matt's single largest holding and thinks Jason is wrong. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is a company that spun out of GM oh so long ago, Ally Financial. Till then, fool on.